Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
All right. Well, welcome everybody to Vantage Point with True North Wealth Partners. It's Friday, October 9th, 2020. I'm Andy Smith.
Eric Susi. Hello, everybody. I know. Here we are again.
Wow.
So, Andy, you look like you're heading for wintertime. What's going on?
That's right. Just right. Growing the sod. I call it sod for my face. So I just transplant it up here.
That's a good one.
Or I'm hoping it just like moves its way up.
Yep. No. We've had a good week of beautiful fall weather.
Yeah.
So how's your golf game? Did you get out there?
Yeah, not so good. not playing as much, so it's fine. But
I hear you. I think once or twice in 2 years for me. So I know what you mean. All good. Well, good. What else?
Well, here we are, 2020, right?
Yep.
And, towards the heading into the final
fourth
lap.
Quarter. Woohoo!
Round in fourth base, or third base.
Third base. Heading for home.
Heading for home. Nice. I'm hoping it's going to be a nice, quiet few weeks here.
Sure.
Just as we head into Thanksgiving, and then
I need to order up my case of beer.
Crazy time. So yeah. So what? So obviously, top of mind, right now
Yep.
is the presidential election coming up here in a few weeks, and obviously it's been dominating the news and even the markets as well. So what are
stimulus package right today? Just an hour ago. Hey, we're gonna push through a 1.8 trillion.
That's right.
So that's why the markets are up a little bit right now, which is good. They do need to target the relief package, get it to the right folks. We're all for that. Targeted. But in regards, we'll touch obviously base. We're going to touch a little bit on the election. So there's some outcomes and what to expect. We're 3 weeks out, so we'll definitely hit that. Let's jump into the COVID.
Absolutely.
That's still there, top of mind. I know, obviously Trump had the infection, the virus. Took a lot of those antibodies. Remember the plasma stuff my aunt used? Trump used it. It works. So, there is a lot of good things out there, and things will be being released between now and the end of the year. So I think there's good signs. That's good for the citizens worldwide. Not to mention that will also obviously help the economy. So
every day they're learning something new. It seems like to how to fight it. So
it's amazing.
That's good.
So that's all good news. Trajectory, as you see here, it's still, the United States still leading, but India is still, has a lot of confirmed cases. So they're right there. So it's India, United States, India, then Brazil, still the top three. And you can see the, up, down, a little bit curl up there. Now, we're heading into the fall/winter, so little outbreaks. You're going to have a tick up is what we anticipate. So market volatility for sure, still to be with us. Between now and probably through the end of the year, even after election. Mm-hmm. Next here, if you the COVID tracker update, as you can see, now there's 5 vaccines that are early
in testing.
Thank you. So we will getting those 5, hopefully 2 or 3 into the approved usage, which should be happening between now and the end of the year. Next, you'll see in the bottom right, a European second wave. So you can see the United Kingdom just spike up dramatically. So they've had some outbreak issues there, France as well, et cetera. United States is a little bit of a tick up as well, but not as dramatic as Europe is having their second wave. So, if it's happening over there, we may have a second wave here. But at least we'll have some, what's that word?
Antibodies.
Antibodies, yeah, thank you. To help lessen the duration and the total effectiveness of the death rates. Obviously, good news, death is going down. Yes, people are getting the virus, but the death rate is low. And with that, let's talk about schools. This is a new little part in the bottom left. School reopenings, infection rate. So in-person learning versus hybrid, or in-person and homeschool or home learning. So in-person, students going, and it's 0.17, so 0.17%. So again, that's the infection rate for high school students. As you can see, teachers at 0.24%, and then with the hybrid, it's even less. Obviously, it's 0.12. for the hybrid. But I find interesting the teachers is 0.25 versus 0.24 on the all in-person learning. So that's interesting.
Yeah.
A 100th higher or a little more than that. But so all around, the country's reopening, which they need to do, and things are looking better. And
yeah, it seems like people are being more cautious. When we go out,
masks are on.
Yeah, people are wearing masks, and I think that's helping for sure. And
taking temperatures,
just being smart about it, being
common
cautious.
sense.
Yep, absolutely.
Moving on to the trade volume. So, I always track this. So you can see here trade volume since last month to this month. Last month was 5.2 billion trades a day, which was up 40% versus last year at this time, or this last year in general. Now this month, the trading volume has decreased down from 5.2 billion trades to now only 5.1 billion trades per day. Again, versus last year, it was 3.7 billion trades in 2019 per day. So instead of being only 40% up over last year, it's now only 37% up in trading volume per day. Again, earlier this year, it was well into the 50%. So 50, 40 range, now in the 37% range. So the markets, as you can see, the trend lines, they are getting more comfortable with what's out there. So,
That's right.
So overall, that leads to more stability. We had ebb and flow this past 4 or 5 weeks in the markets, and we've used those opportunities, didn't we?
Yeah, we finally getting the rebalance done, being able to do that finally. Like you said, the last 3 or 4 weeks, the markets come back to more of a healthy level that we want to see, as opposed to these straight up situations.
Being tactical,
being a little tactical, and
there's still more rebalancing too. We have to,
still finishing that up, and there's still there's still some landmines out there for sure, but we're seeing, things that we want to see better, or that we're waiting to see as we implemented the rebalance. I think it's been good. I think, the markets, like you said, are going to be volatile, but a lot of things would be more optimistic about now than even just 2-3 months ago.
Correct. No, so things are good. And now, right now, just my daily call I'm on with Hedge Eye. So the latest, as far as the short term, again, we're not short term traders per se, but when it comes to new money and or rebalancing, you do want to use the windows because everything trades in a cycle, so you want to follow that. So as of today, this morning, from Hedge Eye, they're stating at this point the S&P is due for at least now a 5% pullback, no big deal, and the Russells took off these past few weeks. That's a small cap. So the Russell 2000 is due for over a 10% pullback. Again, nothing crazy, but you have these pullbacks to ebb and flows like we've seen, but we have to be tactical, push money in when you see those opportunities. So we'll continue to do so. So all we're trying to say is more to come, more of the same, and especially with the markets, with the election coming up in just 3 weeks.
Sure. Yep.
High frequency data. So again, high frequency, a lot of things are still looking good week over week, month over month. So again, just to reiterate, jobless claims. Now the downside of that, the permanent unemployment is not good. So that number is still way too high. So that's what's going to take a couple of years as far as the economy, as far as to burn that off. Stock market obviously is indifferent, or it trades well ahead of the economy.
Yep.
But there is still disconnects. That's what they call it, the K, special K. So K economy, meaning certain aspects of the leg are good. The other aspects of the downside of the leg are bad. The service industry, hotel, airlines, etc.
Yep.
So that's the K part of the economy. But again, going back to the high frequency, the rate of change, the rock I always talk about, year over year, still majorly in the blue. a lot of red. Hotel down 32%. Open table still down 43%. TSA checkpoints flying down 67%.
Yeah.
So
that's hurts.
Still a lot of issues out there. Now, some good news. There's always good and bad. You have to ebb and flow.
Mm-hmm.
Applications for employer ID numbers are up now 19% so far this year. So that's 3.2 million job applications, new employer, new jobs,
new businesses.
New businesses are up 3.2 million as of mid-December,
Good.
mid-September year to date, versus only 2.7 million same time last year.
Sure.
So again, 3.2 versus 2.7 last year.
Yeah, which I guess if you think about it, makes sense, right? Because you have people throughout the year, or even a business cycle, that might want to start a business.
Yes.
But maybe that space is overcrowded, or maybe they, so they're being patient, and COVID kind of unfortunately or fortunately for them maybe opened up the door to be able to jump in at a good time.
Right. Yes. And then with that, M&A. So
Yeah.
mergers and acquisitions. So M&A was big in the 80s, a little bit of the 90s. So typically, I remember working at T. Rowe Price, M&A Mondays, they call it. So every Monday, because over the weekend, they get together and announce them on Monday. That's a little secret there. So M&A Mondays is a lot. So that roared back dramatically in the third quarter. And also as IPOs, my Lord. So IPOs really took off. And it's
What's an IPO?
Initial public offering. Thank you.
Okay.
Initial public offering.
Okay.
So those are just companies who are private, who want to raise cash. You hear the SPACs, all these other things, private funding, all this stuff, but they want to just release their debt. So that's why they go public, is the cash out. Plus, you want to retire the debt, and that's how the entities, the owners, get paid back, et cetera. The people who fronted the money. So so that's a good sign too, though, that people are not afraid to go public during now
Sure.
third quarter, now into the fourth quarter.
Yep.
So again, ebb and flow, a lot of good positives with still some negatives. So we have a cautionary tilt still to our models.
Sure.
We'll take it as it presents itself, and our heads on a swivel. I tell my girls oodala. So the OODA loop. So observe, orient, decide, and act. So that's a military term, but you can use that in life, job, family, sports. So again, observe, orient, decide, and act. And that's what we do on a daily basis. We're still on plenty of calls every day. Now let's head on to good old politics. So since we're 3 weeks out, it's time to now talk about the election. So with that, the options are pretty much three options. So,
or three options. They've kind of whittled it down.
To.
Okay, sure.
Yeah, for the most part. So
it's that easy, right?
Yeah, sure. So Trump wins. Senate and House stays as is. If Trump loses, and then in the House and Senate are split, so Biden wins, House and Senate stay as is. Or then if Biden wins and it's a blue sweep, they control the House and the Senate. So first one, and there's a lot of written documentation on this and what to expect. And over the course of the years, this is a stat, the S&P going back to this is from Larry Williams, by the way, on his webinar, going back to 1930 from the S&P. So regardless of the incumbent presidency, whether it's Republican or Democrat, regardless, if the incumbent wins the following next year, the S&P 500's up over 9%, well over 9.
Yeah, on average.
On average. This is on average. That's correct. The median average return next year, if the incumbent wins, is well over 9%. If the incumbent loses, again, regardless of Democrat or Republican, the S&P the following year will lose well over 6%. Again, that's just going back to the 1930s there from Larry Williams. So that's just a general stat of just how markets would work. And a lot of that's, well, why is that? Well, it's because of the new regime coming in, their new thoughts, their new processes, things that they want to accomplish, et cetera. So versus what you have, you sort of know what you have, what to expect, more of the same, et cetera. Yes. So that sort of makes sense, but you have to just break it out that way.
It's the unknowns, right? So the market likes stability, or likes what it knows. So it's gotten 3 years of Trump, so it kind of knows how it's going to react, respond. Uncertainties or
uncertainty,
it causes some volatility.
You got it. That's a
short term.
Short term, right? So again, going back to that. So as far as we call it noise, pretty much. So in the short term, there'll be a lot of noise, even leading up to it, and then after the election. So we'll be tactful in our decisions of what we need to do as far as the overall portfolio, but it's pretty simple as far as what we will do. Trump stays. If the House and Senate are split, we'll just gear up the portfolios a little bit, tad bit more aggressive in general, because we've had a conservative tilt towards them during this time that we've been in right now. So we've been sort of cautious just leading up to it because A, COVID, B, the uncertainty, et cetera.
Sure. Yep. And even the rebalance that we're doing has some of that built in, really.
Correct.
The different scenarios. And how they could play out. So
we'll talk about that at the very end. But, but we will, let's say it's either Biden wins or if it's a total blue sweep, okay, then we'll make tactical changes as well. I mean, we will raise a little bit of cash, but the primarily is just, okay, there's going to be winners and losers as far as sectors. So sectors, and, we've taken a gold position and that will be with us for a while. But in addition, regardless of who wins, Trump has already stated he wants to spend $1 to $1.5 trillion in infrastructure spending. Okay, in his next 4 years, Biden said he'll spend $2 trillion for infrastructure. So guess what we're going to be putting our money in?
Yeah,
infrastructure. So infrastructure will be there. Healthcare will have some there. Defense sector, materials, things of that nature. But things that, utilities will probably lag a little, communications, there'll be higher taxes, they'll be levered, things of that nature. So the upshot's this: we're going to be tactful, mindful of what asset classes and sectors to either overweight, underweight, or get out altogether, and we'll make those adjustments accordingly. So this too shall pass, but it is different, though, I have to say, this time than in the past years.
Different, yeah,
so,
sure.
So I'll just leave on this article came across. It was interesting on this trade. So JP Morgan Chase, they got hammered. It's on October 5th. It was released on CIO, Chief Financial Officer publication that I received. So anyways, they settled to agree almost $1 billion in trade manipulations. So, I've heard of this over the years, and I'm just going to briefly just read just a moment of what this means. So JP Morgan settled charges for its subsidiary, or JP Morgan Chase, subsidiary JP Morgan Securities, LLC, for manipulative and deceptive conduct, as well for spoofing. So spoofing over the course of the last 8 years. Spoofing is a legal form of market manipulation intended to create the belief that there's a large demand to buy or sell certain assets. This is done by placing a large block order or orders to buy or sell financial assets and then canceling the orders just before the trade is executed. So it's like a false indication, and that leads, it's called spoofing. So they've done that for the past 8 years. They paid their fine, and not good. So I'm glad they cracked down on companies and bad manipulation. And people who think they're bigger is better, not necessarily the case.
Yeah, that's right. Yeah, unfortunately, you see a lot of that stuff. We see it. In just our trade.
So that's a lot going on. But coming up next, who do we have?
Yeah, we got Beth Probst from At the Core.
Oh yeah,
she's our strategic partner. Yeah, she's really great, and her team, and they will. She'll be talking about college planning and.
Different strategies, what to do. Yeah.
Exactly. Yeah. Especially, this time of year as kids or, grandkids even, starting to think about college and, it can cause some anxiety, but her and her team, they do a great job just kind of help laying that out. So
this month's strategic partner, Beth Probst with At the Core, is not affiliated with True North Wealth Partners or Stratus Wealth Advisors.
All right. Well, today we have our strategic partner. We appreciate you taking the time to come in.
Thank you. I'm glad to be here.
Yeah, Beth Probst from At the Core. So we, again, appreciate your expertise. Our paths crossed years ago back at our school for our kids. And I know Andy visited with you and his wife as well, helping them out.
You bet.
We, again, appreciate your expertise because, what we do here at True North, financial planning, helping out.
Money. In a lot of ways, money,
yes.
right?
Oh,
and then college comes in because college kind of costs a lot.
Yes, it does.
But so does retirement.
Yes.
So I know you guys, you really help people frame up what that path is to paying for college well. But Do you remember how much you paid for college?
Not the big final number, but I know it was a lot.
It was a lot, right?
And I worked 2 jobs.
2 jobs. I worked all through college as well, but we've talked about this before. Yeah. Back then, really, in our generation, just one generation ago, we could work and make a big dent in that cost of college. And today that's hard.
Right.
Yeah. So what do we do? How do we, so you're really working to help them prepare on the money side. Yeah. But I would argue, there's a lot to be said for them knowing what they want to do when they're moving toward college.
It's funny you mentioned that. So I don't know if you were aware of this. I was subject to JA, Junior Achievement.
Love
so
JA.
I had that experience growing up at the 2 schools, my grade school and then at high school. And it's called Pay It Forward. I give it back. So I teach. I've gotten back and
love that.
And pay back, and I volunteer my time and help students. And even at my daughter's school, did that like a year or 2 years ago. So I'm just a big believer in that. Try to help kiddos know what they want to do early on as possible. So
for sure. And I think the whole key is, a lot of parents will say to me, really, we're talking about a student that's 15 or 16 or 17 years old. How can they really know what they want to do for a living? And it's a fair question. And I guess I would peel back and remind families that, if your kiddo is college bound, if you're planning to support your child to a traditional 4-year school, then they're going to have 3 big decisions to make toward the end of high school. They certainly need to pick where they want to go to college because we have to put their stuff in the car and drive them there and drop it all off and set them all up.
And cry.
There might be crying. Usually there's crying. Yeah. So they pick a college. Then, believe it or not, they have to pick a major. So in a college, they don't let you graduate from college until you have chosen a major, taken all the classes that you need to, and pass them. So that's decision number 2 that has to be made. But really not in the too far distant future. They have to have an idea of that first job role and that career path because they're going to sit across the table from someone who is going to interview them while, at the end of college. And you have to have an idea of what it is you want to do because it makes your college experience a lot more meaningful. Yes. So we would argue that the best thing that a kiddo can do is really engage in meaningful experiences while in high school. That's what's going to help them move toward the end of high school with more confidence and clarity.
I'm glad you bring that up. Let's maybe unpack that a little bit as far as what can a child do while in high school?
For sure. So high school is a pretty different animal than it was when we were in high school. So I graduated in 1986 from high school in Indianapolis. And very much a suburban, kind of like where my kids live now, very, very similar experience. But there was almost a diverter in high school. It was almost somewhere partway through high school, it was like, if you're going to college, you just stay here in high school and take the next classes to prepare for high school. You were college prep or prepare for college. If you were not, if you were a student who was in trouble, if you were a student who was struggling, if you were a student that maybe had an unidentified learning difference way back when, you might get channeled over to your career center where you would learn a trade, maybe welding or cosmetology, right? So it was a diverter. So today our high school experiences for kids are enormously different. They have everything from career academies. They have classes that they can take in an amazing range of electives, all kinds of things from bestseller classes to mythology classes to fitness classes and food classes, art, music, all kinds of things they can get exposed to. I'm a big believer that they should work.
Yes.
Work experiences will make a student really understand and appreciate the work environment.
Skin in the game. You got to have it.
Absolutely. Volunteering is another great way for students to get involved in an organization, especially one that they may feel some level of connection to. So, and then of course there's the traditional activities, everything from, when students play sports or maybe they're involved in band or other classic club, extracurricular kinds of things. So there's this whole wide range of things that kids can do while in high school. And I should throw in as well, if they are college bound, they're going to want to take those college prep classes, right? Those challenging coursework that will prepare them for their time in college. They have to. So that could be like AP classes, IB classes, which stands for International Baccalaureate, and then those dual enrollment programs that exist in almost every state. And here in Ohio, that program is called College Credit Plus. Great way for students to be duly enrolled in college and in high school at the same time.
And the purpose of that, maybe drill down on that a little bit.
So that's a pretty cool program. It's a program that's been around for a long time in Ohio. It had a different name and had some other used to be called post-secondary education option. It had some troubles that they replaced with the College Credit Plus program. But a student essentially is, while a student in high school, is taking classes at a real college. And so they have a professor. That professor is not speaking to the parents. They have college coursework. They have a syllabus. They are in a college class taking that college class from that professor, but they are simultaneously earning high school credit. And so for students that are in public school, there is no additional money that comes out of your pocket to pay for it. Homeschool and private school students often have a slightly different front door to come into for College Credit Plus, but they can still access the benefits of College Credit Plus. So all those experiences, though, think about that. Your student can they can craft their way through high school today. And it doesn't have to be just put your head down and take the next test and take the next quiz and plan for the next year. It should be a richer experience.
And with that, then you would obviously save some money, because let's talk about credits. So those credits will be applied. It's less 15 credits you don't have to pay for.
Absolutely. And every day of the week, I mean, when parents when I've watched them get pale as they see the real price of college, often for the first time, like often parents that have high schoolers, they know things are different, but they don't know exactly how it's different. So for years, we've been teaching parents how things are different. And one of the ways is the stark way is that cost. So anything we can do to save. But those experiences are just so key that if you can encourage your kids to have a wide range of experiences, it's going to benefit them.
That's great. As far as like counselors, what do you see in school with the counseling? And
no, that's actually a great question. So my kids are, one is now graduated from a public high school, large public high school here in Central Ohio, and I have another one who is a senior. My heart goes out to anyone today who is a school counselor. They have an amazing number of hats that they have to wear. So they often are doing, disciplinary counseling. They're doing mental health counseling on many levels, especially, we're recording this in the time of COVID. There is a lot going on with that. Different learning methods, hybrid, online. They're doing maybe drug and alcohol counseling. They're doing curriculum planning for students. And we expect them also to be there for us to help with post-secondary planning. And at my own kids' school, it's about 400 students that one counselor is responsible for. So it's a
big
lot.
Ratio.
Yeah, and it's a lot that we ask of them for a lot of kids. So we find that a lot of families, they really benefit from connecting with a trusted advisor who isn't necessarily inside the school system, and that they may just get teeny snippets of time. So we've been honored to serve and really be there for families in whatever way makes sense for them.
And that's what drew me and my family to you.
Yeah.
Just, with your speaking, and you have maybe just unpack a little bit more about your company at the core.
Sure.
And as far, you have like modules, you have different programs that you can help starting in college or in high school. Excuse me.
So I will tie back first. Let me the one thought I want to make sure. I guess as I think about all those experiences that our kids can have in high school, I want to make sure families know to kind of coach their kids when they have those experiences, whether they do anything with us or do anything with someone else, just help them understand and evaluate those options. If they can really think about, so I did that club, I did that activity, I took that elective, how did I feel about it? Was it a good fit for me? What did I learn about myself and what I enjoy and what I don't enjoy? What did I not know before that I now know? So really evaluating and considering what they like, their preferences, their values. Those are going to really help that student make better decisions at the end of high school. And that's what we want for them. We want them to lift their head up and look out a little bit. So families, we engage with families in a couple of different ways. There's really 3 big areas that we serve families. We serve them in the area of self-assessment. We help that student because that evaluating those experiences is so critical. But our teenagers don't have a lot of experience doing that. They, we've maybe taken some of those online personality assessments or a career assessment or an interest inventory, all those. We as adults are very used to those. Our students sometimes will take those. I know many students, they crack me up. They'll come back and they'll say, okay, I took some sort of career thing and it said that I should be a bank teller or I should be a park ranger or I should be a postal worker. And I know those aren't right, but I don't know what is right. So that can be really frustrating for them. So we do something a little bit different. It's an interview-based process with students to help them really go back and think through their experiences, what they do know about themselves, but they do it together. So again, it's verbal, it's interview. They do it together with one of our facilitators. So it's called guided self-assessment. We also help, secondly, with career exploration, because kids don't know. They know what a teacher does because they sit in school all day. They probably know what a doctor and nurse do. If they've been an athlete and they have been injured, they know what a physical therapist is. But they kind of know what mom and dad do. But beyond that little inner circle, they don't have a lot of exposure to careers. There's a whole world out there, and we want to expose them to what those options are, so that they can feel excited and interested and not limited. Right. So career exploration is that second area, and then third, we do help a lot with educational path planning. So the natural next questions are, so my daughter now knows these things about herself. She's got a great concept of self-assessment, her strengths and her struggles and her interests. We've looked into these careers, and now what? Now what do we do for the next step? How do we look at colleges? How do we evaluate majors? What about the ACT and SAT? Are they required? And how do we leverage that College Credit Plus program? So we've really developed a very rich expertise in that area as well, and we give a lot of that away because
it's on your website. I know you have a lot.
Because people need that information, and we don't want to hang on to it and not share it. So a lot of free and low cost things that we do in that area.
We appreciate
we're really proud to do it.
Our clients, we appreciate all that information. Yep. But no, it's fabulous what you do. You have a unique space and sector, as far as I call it, we're the quarterback here. We pass the ball around. So she is our specialist for this.
We've always laughed, Eric. When we first started doing this, we thought, do we really want to interview teenagers? Do we want to sit with teenagers? And we have found that it is the most rewarding work. It is so to be able to make an impact. And you see this, you make an impact in people's lives. That is, especially at a time with teenagers when they have a lot of question marks over their head. They don't know how to get where they're going. We really are very honored and grateful to be a partner as well.
Appreciate that. Thanks. And then, sort of maybe putting a bow tie on this. Well, with the FAFSA just opened up, October. So that occurred. A lot of online onboarding. So maybe parents are pulling their hair out, and there's money out there. You want to apply right away, sooner the better. The pot of money shrinks up. So just always apply. I know there's a calculation, the EFC, expected family contribution. So that's just all part of it. And then I think you mentioned earlier, you have to set up an ID ahead of time. So maybe explain.
They do for sure. Yeah. So if any family is doing that FAFSA for the first time, I would encourage them to just take a deep breath. It's really not that bad. It's really not that bad.
It's gotten better, that's for sure.
It's really not that bad. And they do though need that first ID and password that the student and the parent both need to get is called an FSA ID. And boy, that's really challenging for a woman that just got braces a week ago to say FSA ID. I am very proud of myself. So once you get that FSA ID and password, and that's kind of the way that you'll log into FAFSA.gov, and you want to make sure always to go to FAFSA.gov and not anywhere else, because that won't be the right place.
Right.
But it's not difficult. It's just a documentation of that student's income and assets, and they can pull that directly from the IRS.
Yes, now it's online, right?
With
It's
a data retrieval tool, right? So just bring it right over, and it pulls it into the FAFSA. Same for the parents. So there's really those four pieces of input for the FAFSA: the student's income and assets, the parent's income and assets, and then out spits that magical EFC number, and then and it gets sent automatically to the colleges that your student, if they're a senior and they're applying to several colleges, the FAFSA will go to them,
and
all those colleges.
Once, and for Ohio, it's like 20 or 30 colleges, or it covers a lot of Ohio colleges.
It sure does. Yeah. In fact, if anyone is trying to access federal student loans, they'll need to fill out that FAFSA. So even if a college uses another method to do that calculation, there are a couple of others out there, but the FAFSA is always the way to access federal money. Yeah, for sure. Yep.
That's great. So, I'm a big believer in Ohio 529. So we encourage that for our clients. We help clients set them up online or behind the scene. It's just a great way to put money away. So, and have a goal too, as far as the financial side of it. You, as a parent, you want to decide, do you want to cover 2 years, 3 years, or if you're entitled or able to, all 4 years?
Absolutely.
So, like my wife and I, we came up with solutions like, okay, we're going to cover X amount of years, not the full 4 years, because we want our girls to have skin in the game. But
yes,
everyone's different, but it's a personal choice. And then, put money aside, whether it's $100 a month, $200 a month, whatever it is, it's dollar cost average.
You're chipping away. One of the I've also heard from families, number one, on the downside, you don't want to get behind. So starting that as early as possible.
Early as possible. Let's just stop you there. So this is how sick we are. We actually opened up a 529 before we even had kids.
I love it.
That's the planner in me. So.
I love it. I think that's awesome. But so you didn't get behind. Yeah. You stayed on it, which is great. The other little thought to plant, for families that are trying, maybe have the means to pay and they're trying to figure out, do we do this or not? I love the idea of setting an expectation for your child that this is what we have. Right. This is what we're going to be able to pay. We need you to have skin in the game. We expect you to pay this amount. And I love the idea that if your child executes beautifully on their college and career plan and they head out into the working world and they're able to achieve and be independent, but they're coming away with a little bit of debt, nothing stops that parent from gifting that child to make that debt go away. If they and what it
$15,000 per parent, so that's $30,000.
What a joyful and I mean, that's not chump change for many families, but if you're on the fence about, do we pay for all of it or do we not pay for all of it, keep that in your back pocket that you can let them know at the beginning they need to pay something, but you could magically make it go away if you choose to.
No, that's beautiful. No, so we covered a lot of topics today.
We did good.
Thank you. I know, folks, you can always reach out to us here at True North Wealth Partners, but obviously I'll turn it over to Beth, but she'll explain to you as far as how to get directly, if you want to go to her directly via website, phone number, go right ahead.
You bet. So I would hope that families always feel like they can just call and they can. Easiest phone number to use is 614-404-0646. Our website that I mentioned that has a ton of information on it is gettingatthecore.com. So GETTING, getting the word at thecore.com. Those are really the two best ways to reach us. We are active on social media. You'll find us. We post daily on, sadly.
I know. I get a lot of your stuff.
I know. There's a team of people that do amazing work for At the Core. So, but you'll find us on Facebook and Twitter, Instagram. Yeah, so that's it's
great services
LinkedIn.
You provide.
Thank
so
you.
Keep up the good work.
Right back
Thank
at you.
And,
Echo.
Yeah, stay well. Enjoy fall.
Thank you.
We'll see you next time, though.
Thank you so much.
Pleasure, Beth. Thank you.
Mm-hmm.
Oh, boy. Here we go. So, tips of the month. Now, folks, if you remember, we started last month episode I was going to go to the racetrack, Mid-Ohio. Okay. Yeah. Oh, yeah. So it was IndyCar, Bobby Rahal, and the team owner, David Letterman, or what have you. So Graham Rahal, he finished fourth on Saturday's race. It was a doubleheader race on Saturday and Sunday. Fourth on Saturday, fourth on Sunday. Good times. It's fun. But it was 2-4 fourth place runner-up. So he missed the podium first, second, third. He missed it. He was disappointed. But also, though, news that just came out. It was released here in the paper. So Rahal has been, in the greater Columbus, Hilliard, New Albany area since like the 80s, pretty much, when Truman started all that. And they had a race facility right there next to off 270 in Hilliard. And basically, they're be closing and moving that operation out. So they just announced a new location. They're going to consolidate their facilities in Zionsville, northwest of Indianapolis. And they're going to combine both the IndyCar operations and their International Motorsports Association operations, which is based here in Hilliard, out to the new Zionsville location. So for those of you who may be, IndyCar, race car fans, that will be occurring. They're going to spend about $20 million. It's going to create about 73 jobs, and by 2024. So it's a 13-acre site that they're creating and doing that. It's going to help just facilitate. It's been challenging. Bobby Rahal said here in the article, it's just been challenging having two locations under one roof. Efficiencies will be gained there, so that's the news. So I will miss not having them driving by their operations here. And then, we talk about rates. Rates are still low. So 30-year mortgages, folks, are still under 3%. 15 years, or 2.25-ish. So for those of you who still need refinance, cash out, whatever, pay off debt, the OPM, other people's money, that's good debt to own. So rates so low, we don't have a problem at that, it's at such a low rate. If you need to do things, great time to do it. Also, we mentioned cars in the past episodes too, so car loans are low. Well, we hope you enjoyed that episode with Beth at the Core.
Yeah.
She provided a lot of good, useful information, and we appreciate you. Looking forward to next month. Guess next month,
if we're still alive.
If we're still alive, no.
If we're still here,
no. So I don't think we're not going to have a strategic partner for next month. So there'll be a lot to unpack after the election. So we'll go through all that.
Absolutely.
So appreciate your time. Thanks for tuning in, folks. Stay well, safe, wear their masks. Take care.
That's right. See ya.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Special thanks to our producer Nathan, as we will be producing these episodes on a monthly basis. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor, DBA True North Wealth Partners. Investing involves substantial risk. True North Wealth Partners and Stratus Wealth do not make any guarantee or other promise as to any results that may be obtained from this. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. No reader should make any investment decision without first consulting his or her own personal financial advisor and conducting his or her own research and due diligence.